Hello, lovely people out there. How are you all doing? I'm Kate Hill, and welcome to one of our monthly special property features. Today, it's all about national house prices and where they are going. So today I'm going to focus on Melbourne, Sydney, Brisbane, Perth, Adelaide and Canberra. Now, we do give you the best, honest and balanced commentary and content on our channel. So before we get started and we do anything else at all, please let me ask you to subscribe to our channel, hit the notification bell so that you get all our news, our expert hints and tips around buying, owning, and investing in property as soon as we post them. And as important, if you are enjoying our free content and you're finding it useful, please click on the all-important like button too. We do really appreciate that support. Now, for those of you that know me, you can absolutely skip the intro and go here to get straight into those juicy bits. And for those of you who are new to the channel, welcome. I'm so happy you found us. Please keep watching. To explain what qualifies me to be standing here talking to you about property buying and owning and investing, like, who the heck are you, Kate? Well, me and my team, we are professionals in property. We have been in real estate for a long time, advising and helping people. We have seen most things happen. We've gone through cycles and we ourselves own and invest in property. We are also a rare breed because we are qualified property investment advisors. We don't get paid by anyone to sell you property, and we do genuinely care about empowering you to get the best outcomes for yourselves. And we are experts at what we do. We attend auctions, we appraise, analyse and buy property. We are out there 24/7 at the property coalface. If that hasn't convinced you, I don't know what else to tell you. Now, you can watch our video here. It's also listed in the description below for some information about how property reacts in general to global economic shocks. Okay, so what is happening around the country with property values? Now, nationally, house prices have fallen over September. The Home Value Index shows a 0.1% decline in dwelling values, the lowest in 3 months. But they actually increased everywhere except Australia's two larger markets, Melbourne and Sydney. The only price declines recorded around the country were here. Melbourne fell 0.9%, Sydney fell 0.3%. But September saw a strong turnaround in housing market sentiment. Consumer confidence increased, new listings rose, and 6 of those 8 capital cities recorded a rise in home values over the month, according to CoreLogic's hedonic home value index. The rate of decline across Sydney's market has been consistently easing since July, and the remaining capital cities, except Melbourne, have all delivered some level of growth. Now, Darwin leads that growth with its prices up 1.6% in September. That was up from quite a low base, of course, for those of you that follow that market. That was followed by Adelaide up 0.8% and Brisbane up 0.5%. The combined regional areas were up 0.4%, with growth recorded in the regional areas of New South Wales, Queensland, South Australia, and Tasmania. Tim Lawless of CoreLogic comments that the aggregate effect of low mortgage rates, low inventory levels, government incentives, and improving consumer sentiment seems to be outweighing the negative economic shock brought about by the pandemic. In terms of those auction clearance rates, figures that everyone loves to look at, CoreLogic report that the combined capital city preliminary auction clearance rate increased across a higher volume of auctions. There were 1,090 homes taken to auction over the week, up from 648 over the previous week, although significantly lower than this time last year when it was 2,022. Of the 822 results collected so far, 71.5% were successful. So let's look at Melbourne. The median house price for the Melbourne metropolitan area dropped, as we've already said, 0.9% in September, 3.3% in the September quarter, but does remain 6.7% higher than at the same time last year. Auction activity, of course, remains low across Melbourne this week, with 60 homes taken to auction. Of the 52 auction results collected so far, 31 were successful, while just under 1/3 of reported auctions were withdrawn. Over the previous week, 55 auctions were held across the city, while this time last year, 974 Melbourne homes were taken to auction. Now, not surprisingly, Melbourne is the worst performing capital city in the nation in terms of pricing, but it is nevertheless holding up solidly in the circumstances. CoreLogic data published early in October indicates that Melbourne house prices overall, as we've sort of indicated already, have dropped 3.4% since the start of the year, while apartment prices overall are down 1.4%. Given the second wave of the virus causing another lockdown in the city, really this is a remarkably steady performance. Now, the key factor which has kept prices relatively solid is the absence of buyers and sellers and any real significant transaction numbers that will give us reliable data. So the jury is still out. The question now, as restrictions start to ease, is what will happen as the Melbourne market starts to return to some level of normality. We suspect that there will be a resurgence, and it should happen quite quickly. The Melbourne result, of course, is compounded by job loss, income loss, and that we have seen throughout the COVID-19 pandemic, as well as the fact that this city does have far more exposure to overseas migration. We will really need to see what happens moving forward, and when we have some more solid data to support further figures. Moving on to Sydney. Many major bank economists are now scrambling and revising their growth forecasts for Sydney property and are a lot more bullish about this market, having originally forecast major declines in property values. Westpac, CommBank, AMP Capital and others were tipping up to 30% declines in prices back in March. Now, this hasn't happened yet, and the latest price data shows how wrong they actually were. Sydney house prices on average fell just 0.2% in September and 1.7% in the September quarter. In the year to date, Sydney house prices on average remain 1.5% higher than at the start of the year and are still 8.7% higher than a year ago. 7 months into this pandemic period, Sydney has weathered the pandemic pretty well so far and is one of the many cities to prove the economists and journalists wrong. These are all sweeping generalizations, of course. Every suburb in Sydney and Melbourne does not behave in the same way. There are markets within Sydney and in Melbourne that are growing. But I digress. Sydney was host to 754 auctions this week, up from both last week when 430 auctions were held and this time last year when 733 homes were taken to auction. Of the 587 auction results collected so far, 429 were successful, similar to last week's preliminary result. It remains to be seen whether the boost to infrastructure spending will balance or outweigh the loss in population growth that will result inevitably from a loss of overseas migration. But we should all note that Sydney has never really been the nation's population growth leader. Now, for both Sydney and Melbourne, once again, we do issue a warning for some inner city unit markets where there are large numbers of units listed for rent at the moment. Inner Sydney's and Melbourne's unit rental markets have been one of the hardest hit in Australia during the pandemic, if not the hardest hit. Vacancy rates rising, rents dropping. A substantial drop in foreign student numbers, all those unoccupied Airbnb properties flooding the market, and the shutdown of overseas tourism during our COVID-19 period has led to growing numbers of landlords who are trying to secure permanent tenants for properties in these inner city areas of Melbourne and Sydney. The sharp reduction in rental demand within these locations is resulting in lower rents and extended vacancy periods, as we've explained. And this, of course, ultimately may have a negative effect on sales prices, given that particularly investors are concerned about rental returns, of course, and also whether there'll be any upside in capital growth in the next few years. So please beware of these markets. There are unscrupulous spruikers out there preying on the unsuspecting. Brisbane's market overall has been solid throughout the pandemic period and rose by 0.5% overall in the past month. CoreLogic figures indicate that prices rose 0.4% for houses and 0.7% for apartments in September. Brisbane's median prices are up 4.5% for houses and 0.7% for apartments in the past year. They have held steady over the September quarter, are up 3.8% on this time last year. Now, Brisbane, it's really well placed to benefit from the 4 key trends that we see impacting real estate markets across Australia. It's got the virus under control early, and apart from that state border closure, life got back to relative normality in Brisbane. The vacancy rates are around 2%, which is not as low as some capital cities, but it's certainly very, very comfortable outside of the CBD and near city markets. First home buyers are very, very active in Brisbane, which offers a range of affordable precincts in the metro area and those outer suburbs. Brisbane and Queensland overall gain more from interstate migration than any other state or territory, and most of this growth goes to Brisbane and the southeast of Queensland. Now, the impetus from people moving from Sydney and Melbourne to more affordable areas with lifestyles is likely to boost the Brisbane market further. The Brisbane market has been held back in recent years by the absence of major spending on infrastructure, as we have reported before, and we've all known about, all of those of us that own property in Brisbane, just waiting for something to happen up there. But that is changing as several multi-billion-dollar projects crank up, and the federal budget provides further impetus. Brisbane will also be boosted by the steady rise in the mining industry. In terms of the number of people employed in the resources sector, Brisbane is the biggest mining town in Queensland. Moving on to Perth. No one can be in any doubt that the Perth property market is staging a long-awaited recovery. Perth is benefiting from all the major factors which are, like we said, impacting real estate markets in a positive way. Got the virus under control really, really early and has maintained that control. As a consequence, its economy is chugging along really nicely. Consumer confidence is high. First home buyers are really active, helped by high levels of government assistance, both state and federal. Vacancy rates are super low, and Perth rents have risen more in the past 12 months than in any other capital city. This was long awaited and underpins the better performance by the state economy, helped by rising strength in the resources sector. House prices are starting to react to that. CoreLogic data indicates that Perth prices fell a little bit in May, in June and July, but were stable in August and rose a little bit by 0.2% in September. It's looking better for the Perth market now than at any time in the past 6 years. Also, what's interesting is that Perth is currently the most searched Australian city for prospective property buyers on Google, with surging demand starting to push up prices across nearly half of the WA capital's suburbs. Analysis of Google property searches by a digital marketing agency showed Houses for Sale Perth has had the highest number of searches nationally since the start of the year. Some of you might find that surprising, but this was closely followed by Brisbane and then Melbourne in third place, Adelaide, Canberra, Sydney. It indicates a higher demand to purchase property in WA compared to the other states. At the same time, buyer activity is tracking 40% higher than at the same time last year in Perth. with the Real Estate Institute of WA data showing 45% of Perth's suburbs recording price growth in August. As demand increases, stock on market is on the way down, with the number of houses for sale in Perth at the end of September down 23% on the same time last year. Now, Perth's vacancy rates, let's just come back to that. They are at record lows, with predictions that tenants will struggle to find suitable accommodation in the coming months. Real Estate Institute of WA figures reveal that the Perth vacancy rate has dropped from 2% just 2 months ago to 1.3%. Coming on back to Adelaide, like most other capitals except Sydney and Melbourne, it's continuing to chug along very nicely and remains one of the most stable capital city housing markets. Overall, property values grew by 0.8% in September and 0.9% in the past quarter. Prices are up 3.6% year on year. Adelaide's more expensive properties have recorded a slightly higher growth reading than the lower value properties, which is always interesting to see who's buying property. Adelaide sellers are in a very good position to negotiate close to their asking price, with stock levels down significantly on the same time last year. Now, with the number of properties listed for sale about 60% lower than this time last year, competition is tight, resulting in many properties selling in off-market deals. The vacancy rate across the city stands at just 0.8%. South Australia is less reliant on international tourism than other states and more reliant on interstate tourism. They are keen to open their borders again. So once those borders do reopen, the state economy should benefit from that increase in Australians taking holidays locally. The outlook for residential property has improved vastly in recent weeks in the Adelaide and South Australia market. Sentiment towards housing and the purchase of a home has bucked the overall more negative sentiment around the broader economy. South Australia had one of the biggest improved sentiment towards the time to buy a dwelling, which reached a 6-month high nationally. Affordability is clearly front of mind for prospective buyers, with Adelaide offering one of the lowest purchase prices of all the capitals, as well as offering buyers a great lifestyle and some pretty good yields. What's not to love? Demand could be increased by Australia's success in dealing with the global pandemic compared to a lot of other countries, and South Australia in particular. It makes it an attractive destination to reside, particularly towards those lifestyle regions. Canberra, the nation's capital. The property market there has been a quiet achiever, with dwelling values having reached a new peak after growing 6.3% over the last year. Canberra has delivered some level of growth in its house prices each month since the pandemic hit. It is the only capital city to have done this. Canberra has managed to stay pretty much virus-free, and given its unnatural advantage as a government city, it has continued to have a strong economy, low unemployment, and a solid property market. Considering a large percentage of Canberra's population is employed by the government or industries supporting that public sector, Canberra's property market is less likely to be affected by the upcoming recession. I say upcoming, we're technically in it, but less likely than our other capital cities. Australia's national capital continues to have very low vacancy rates, with just 0.9% of rental homes vacant in September, according to Domain and SQM figures. This was down from 1% in August and 1.1% a year ago, but they're consistently low. Property values increased 0.4% over September, and the median value is now $645,000. Units outperformed houses in September, where median values of units of $458,000 was up by 1.1%. Houses rose 0.2% with a median value of $733,000. According to Domain's Buyer Index Demand, Canberra had solid growth in buyer demand since the beginning of the pandemic in March at 25% for houses, and units were also up at 16.7%. So while lockdowns have affected buyer activity in a lot of the other capital cities, Canberra has continued to buck the downward trend. Please don't forget to just quickly hit on that subscribe button, leave us a comment below, and don't forget to hit that like button too. We do really, really appreciate your support, and I look forward to seeing you again very soon. Bye.